One of my favorite books that is never talked about is this one right here. Diary of a Professional Commodities Trader, Lessons from 21 Weeks of Trading by Peter Brandt. Peter Brandt is someone that I looked up to in the industry as someone who trades a very similar style as me, a classic chartist and a classic price action trader. And essentially what this book was a 21-week journal of all of his activity. So for me, it was the same as getting a chance to look over Peter Brandt's shoulder, watch his analysis, see what he's taking, see why he's taking it, and then watch the review process of it. It was very helpful in really me progressing as a trader. That's one of the reasons we try to do the same thing over at Tier 1 Trading, where we run live trading rooms and have you come into the office with us every single day for a few hours a day and mark up the charts. And why I wanted to do this video is because usually I'm showing you guys trading opportunities that are on my radar in the weekend trading edge video. But today I actually want to show you a trade evaluation. So what you're going to witness is a two-part series, right? Day one comes in with us analyzing the initial setup. It's not quite there yet, but we're talking about what we see, why we see it, and what we're going to look for in order to take the trade. Then on day two, we're going to come back after the trade was triggered, and I'm going to walk you through again why I took it, what I was looking for, and some alternative ways that you can get involved as well, just in case your trading style is a little bit different from me. So if you're someone that wants to get a live experience of what it looks like to break down a trade all the way from start to finish, check it out. I'll show you in a little bit. So here's what we had on Aussie Canada. This was a loss of momentum pattern coming in here. You can see higher time frame, we hit a level of structure right here. Then once again, what do we always warn about? Overlapping levels of structure. So you want to keep that in mind. But you can see we came up, we had a doji candle. A doji candle is what? A sign of indecision. And now we're putting in an indecision candle right here. When we go down to the 4 hour, we had this loss of momentum pattern, right? You can see we came up high slope and then we bent off like that, divergence on the RSI, and we ended up breaking down. The question here is this going to be a continuation higher or a reversal? And seeing how we're at structure, I do think this may be a reversal setting up. So what you're looking for in a higher time frame is lower time frame. Look to see a hold and a sign as we retest these highs, this level to really this level, to be honest with you. Look to see if we can get some type of reversal reason here and a chance to trade it down here. And a move to this level would be complete with a 127 extension. Fibonacci extension, swing high to swing low. 127 extension. You missed too early to draw an AB equals CD pattern. That was something I was thinking about earlier, but we don't know until we figure out where we retrace to. But if we do retrace in that zone, that would be an AB equals CD. And obviously it's a level of structure with an elephant down there as well. So this is a sneaky little kind of counter trend reversal trade. And the premise behind this is this, right? We see the move up, we see the loss of momentum pattern, and keep in mind, this is coming into structure. And then you're looking for like the reversal off of this level. So the kind of the same thing we spoke about before, where we break consolidation and then we have our first test and then we catch this move, right? That second leg. This would be an example of this, but coming off of a slanted level of consolidation versus a horizontal one. Does that make sense? Does that make sense, guys? It's the same premise. This is that breakout. This is that first retest. This is that big leg down. Yeah, did I lose you guys on here? We got it. Good. Okay. Perfect. So I talk a lot, and sometimes it all makes sense to me because I see it right away. But sometimes it's like blah 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 gobbledygook. Okay, perfect. So keep an eye on this again. This is the zone. Wait for reason for entry. Now I need this to come very, very high because again, I can't shoot for first targets down here. So my first targets need to be at a retest. So I'm hoping that we come all the way to these highs right here, maybe get like a nice little pin bar, but not too big of a pin bar, like a small pin bar. And then I can get TGT1 here and then take the secondary off down here. That's what I'm hoping for. But if you're a continuation trader, I mean, if you get this can open up. And here's a good example of a continuation trader in consolidation, right? Because we're at a level of structure, right? So this is not like a classical trend continuation trade because we're hitting a level of structure in the higher time frame. but you're trading it like a continuation trader, right? So you can still look for a move all the way down to here and get a pretty decent, pretty solid risk reward off of it. So this is a good example of the earlier conversation about the continuation within counter trend. Now that was a day one analysis. Later in that day, I got filled. We then came back on day two to take another look at it and give some different perspectives from traders who have slightly different rules of engagements, whether it be entry reasons or whether it be stops and targets. I did enter the trade on Aussie dollar yesterday. If you guys remembered the rising channel that came down and broke and retested. I did get involved in that. I know Fitzy on the chat this morning is looking for a secondary reason to get involved in that. So I guess we can start there. And of course, if there's any place else you want to take a look at, let me know. I don't usually like watching pairs that I'm in, but we can give a follow through on what we looked at here, right? So do we remember this from yesterday, guys? I don't need to go back and do the whole IPDE of it, do I? Do we remember this one from yesterday? Yay, nay? We do, okay. We saw a break and close below that level. And then what we were looking for is we were looking for a pullback right into this level right here. Now, can you guys remember why I chose this level? Technically, it goes all the way up here. But in isolating a level, right? Because again, over the years, I've gotten better with my predictive skills of where price is likely to go. Why did I isolate that level versus the bigger one? Who can tell me? It's a clue we talk about all the time. Elephant, guys, right? Elephant candle? There we go. Not the biggest elephant candle, but again, it is a candle, right, that stands out amongst the rest. Would you guys agree? We look at all the candles in this series, aside from, there's one more elephant. The other one is maybe even more obvious. Can you guys see the other elephant candle that's on your chart right now? Right over here. So aside from this one right here, which was also used, and we'll talk about that in a little bit, aside from this one right here, right, do we have a larger momentum candle on your screen? Can you see one? Look at the range of these candles. Anybody? Anybody? No, right? Now, I guess you can literally go and measure them out, but but this is the largest candle on your screen right here. And then what do? I look for we look for a consolidation zone before them, right? That's a little clue, right? We see right here, markets consolidate before they break up, right? Markets consolidate before they break down, right? So although the technical level, right, goes all the way to here, the level that we want to avoid, right? This is the level that we would anticipate price going to. And what did price do? It went there, right? Price came up, We had a few clues. What clue do you see there? These arrows never draw correctly, but what clue do you see there? Reading a price chart bar by bar. The book that I never finished. The one trading book, aside from Unknown Market Wizards, the one trading book that I never finished, right? Yeah, we have a high test bar. Then we do it again, right? Now, this is a stronger bar than that one, right? So it's not necessarily an increasing negative sign, but we do it again. And then what do we get after that? You guys know my trading style. What comes after that? A lower low, lower close, right? So we talked yesterday, I think it was yesterday, about reason for entries and different kind of ways to do it. So a super aggressive trader, what do you think? How do you think the most aggressive trader in the world, how do you think they would have entered this opportunity? What technique would they have used, or could they have used? And this is kind of like I think it was yesterday, we talked about like the scale of aggressiveness to conservative. It might have been Monday's Q&A. What do you think the most super aggressive trader would do in this area of trading? Yeah, just a limit order right here. They would say, you know what, Akil, this is my zone. Maybe I'm trying to think of it, maybe a Fibonacci or some volume or something to get a precision point, but they would say, you know what, I'm just going to put a limit order right here. This is kind of what we saw at the 2618 yesterday. I'm going to limit order right here at the zone. It could be at the beginning, the end, wherever they choose. And if price hits that zone, I'm involved, right? That's one way to go about it, right? Another way is looking for, let's say, a single candlestick formation. So maybe you wait and you see this candle right here and you say, okay, if price action gets into my zone, then I look for negative candle, reversal candle, right? And then you have your arsenal of like what counts as a negative candle, right? So we would agree this first one is a weak bullish candle. The first arrow on your left, would you guys agree? So maybe that's your first sign. So maybe you see that single candle and you're like, you know what? Boom, that's all I need. I'm in next bar markets. That would be kind of the next scale of aggressiveness, right? The next one would be a multiple candlestick combination. So that's where like your lower low, lower closes come in, your 3-bar reversal, stuff like that. And then the next one after that could be like your double tops and then like your 26-18s, right? You can kind of go, I don't know what would be more conservative than that, but you can go down the list. And of course, like if you're someone that uses a different form, maybe like a moving average cross or something like that, you or an RSI or whatever it is, you find out where that lays on the scale. But for me personally, again, I'm more aggressive than I used to, because when I first started trading, I required a double top for every trade. And as I've evolved as a trader, one, I've got better at analysis. Two, I've noticed how many trading opportunities occur that I analyzed 100% correct, but didn't give me a double top. I got more aggressive, right? And that lower low, lower close was something that I added to my arsenal. I don't think I'll ever be aggressive enough to do a limit order. It tickles the brain, but I just can't see myself doing that because I'm conservative by nature. But who knows? Who knows how we evolve, right? So the lower low, so you have your clues, and then for me, the lower low, lower close is the final clue. Seeing a break below and close below that zone, for me, gives confirmation that, hey, this is going to be a reversal point, and I want to be involved in the market. So we have our theory for how we want to trade. We have our zone. Price came into the zone. We got our entry reason. What's the next thing we need to do with our trading to make sure we have a good trade, right? We have our theory, our premise, our hypothesis, whatever it is. We have our entries. Yep. Targets was the easy one, or maybe not the easy one, but targets, we spoke about this yesterday. For me, I'm not a continuation trader, so a retest of the lows here are my targets. If you're a continuation trader, we spoke about one, told you this would come in handy, right? Our zone of elefante, right? Right down here, because this is the next key level of structure, in my opinion. Do you remember what else we had down at this level? Do you remember? Boom, 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 boom. We had 1.5 things drawn out yesterday. Yep, we had a Fibonacci extension. So I don't know if Ami's in here, but she was asking what is the value of Fibonacci's to project extensions, right? We had a 127 extension, coincidentally, lining up right at that level. We also drew an AB equals CD pattern. We had to wait for the retracement to happen first, right? So we don't know this, but you can do an equal measure move, and that puts us right down at this level. So anything else that you would notice at this level? For me, this could be target ones for you. This is target twos for me down here. But if you're an extension trader, this would be a target one, which would give you a nice risk reward. Anything else you notice at this level? Any adjustments we might want to make? These are the little small details in trading that make a big difference. Small details that make a big difference. Small details that make a big difference. You guys notice anything else? Any adjustments you would make down this level? Volume. We could use volume, yeah. That is one. You zoom on out here. We could use volume. The void, right? You guys see the void. Yeah, even handled number, right? So you can make the adjustment from 89.95, which is where that 127 Fibonacci extension lies, to getting right above that at 90.02 to avoid that even handled number. Avoid that psychological number of 90 even. That's one adjustment you can make. All right, so you have your targets, right? Stops. What are some ideas for stops here? We know our entry is, I'll draw another line in for entry right here. Above last structure, okay. How? So one ATR above initial structure high. So one ATR above this high right here, Phil. So Phil's saying take this level and go one ATR above. So this level is 90.76. That will put you at 90.87. Any other ideas? What am I doing here? So what I do is I take ATRs, right? So I'm going to need to delete this, right? So what I want to do with the ATR is I want to take the ATR from this level right here. This is 90.67. A 1 ATR is going to put me at 90.78, right? Now, there's a problem. Does 90.78 give me a lot of breathing room? The highs are at 90.76. Doesn't give me a lot of breathing room. This is where that 1 to 2 ATR zone comes in handy, right? Because another ATR is going to put me at 89. And now I have room to move that stop anywhere within this zone. Not anywhere, because it would be a less than 1-to-1 risk reward, but I have room to move that stop up to 83, which is where I want it to be. So does that make sense how we have that, why I put that zone? It gives me flexibility. I don't necessarily want a stop loss this tight, but I did want it at 83. So I have the room to move that stop anywhere between my 1 and 2 ATR zone. Again, in this case, not fully flexible because it would have ended up being a less than 1-to-1 risk reward. But you have that room to avoid an even handle number or avoid the highs or avoid a Fibonacci level, whatever it may be. Now, the cool thing about this trade, right? What we've done is this. We've pushed down. We've retraced. We've put in a lower low, lower close, right? Do any of you guys use active trade management? What I was able to do is move my stop from 83 now down to 63. Based on the new structure that was created. So not quite at a risk-free trade, but substantially reduced my risk as the trade moves in my favor. Because if I'm right on this trade, we should not clear this structure level. If we do, I'm wrong. If I'm wrong, I want to be out as soon as possible. So we'll see how this thing pans out. Fitzy was looking at this morning, looking for an alternative way to get involved. And that's why I wanted to take a look at it. Hope you liked it. Leave questions and comments below. If you like these type of videos, let me know as well. I'll do more of them. And if you ever want to join us in the live trading rooms and sit and watch over a shoulder of a trader or traders, we do 2 sessions a day, 3 days a week. The London session with Jason Greystone, the New York session with yours truly. Come on over. It's part of your Tier 1 trading trial membership, so no commitment. Just hop into a room with professional traders, hop into a room with other traders aspiring to be great, and spend a few hours a day marking up some charts and getting your questions answered. All right, until next time, plan to trade, trade your plan. Take care.